Stop gambling with yours and your family's future. You have to learn how to get your money out of the stock market, casino, and into assets that can predictably build cash flows and wealth. I'm Johnny Walker. I'm a successful endodontist with multiple practices and a 13-year veteran multimillionaire real estate investor. And on this channel, I teach high net worth professionals tried and true principles of investing and wealth building so that they too can live a life of fulfillment and true financial freedom. Investing heavily in real estate has allowed me to take a step back from my busy dental practice to part-time hours and spend more time with my family, take my kids to school every day, take 6 to 10 vacations per year, and spend time pursuing my passion, which is this, educating my fellow dentists and doctors. Now, most of you already recognize that the stock market is a casino and that it isn't a predictable way to build real value and wealth. So what is the alternative? In my opinion, and what I've shown great success over the last 250 years for many, many people, is multifamily real estate investing or apartment building syndication. On this video, we're going to compare the stock market versus multifamily real estate investing. And after this video, you should be able to identify the key strengths and pros and cons, and whether this is the right investment class for you on these 5 parameters. Number 1, rates of return. Number 2, risk. Number 3, cash flow. Number 4, tax advantages. And number 5, inflation. But before we get started, tell me about yourself. Are you a doctor, a dentist, maybe a lawyer? Let's continue the conversation in the comments below. Number 1, rates of return. The stock market over the last 15 years, from 2004 to 2018, expanded at about roughly 7% a year. And over the last 30 years, the S&P 500 has returned about 9.06% between the years of 1989 and 2018. 9% doesn't sound too bad, right? But you got to factor in the fact that there's volatility, there's assets under management fees. Money managers take fees. Whether you lose or make money, they get paid every time. Long-term capital gains taxes. And when you factor in inflation, you'd find that those rates of return really come down to about 3 or 4% per year. And trying to depend on that to retire, you're going to be working until you're 95. The rates of return in multifamily real estate, on the other hand, is double digits. And it's had a track record of over 200 years. So when you compare the stock market to the returns in multifamily real estate, it's not even close. On top of that, these returns are recession resilient. When the stock market crashes and goes down, like in 2008, like it did briefly in 2020 during the pandemic, multifamily real estate does not dip and come and go. The returns stay consistently high. Now let's compare that to the rates of return in multifamily real estate. Multifamily real estate has been returning 10+% per year for 200 years. The track record speaks for itself. It just wasn't available for accredited investors to invest until the year 2012. So that's why you may or may not have heard of that asset class yet. But in terms of rates of return, it's not even close when it comes to the stock market versus multifamily real estate. Number 2, risk. Now, stock market is definitely a riskier asset class than, for example, multifamily real estate. In the stock market, you are at the whims of arcane forces that nobody really understands as to what causes the market to go up and go down and all around and around. And people say, okay, well, investing in the stock market long term, you avoid a lot of that risk because you're not worried about the day-to-day fluctuations. I would beg to differ. Say that you know that your children are going to be graduating from high school in 15 years from now and they're going to need money for college. Or you are going to be retiring in 15 years from now and you're going to need money to supplement your lifestyle so that you don't have to work when you retire. In this scenario, can anybody predictably say where the stock market will be in 15 years from now? Where will it be 10 years from now? Where would your wealth be in 5 years from now? In fact, I would ask you the question, how much is your portfolio going to be worth 6 months from now? Is there a crash coming? Is there a correction coming? We've been riding high for a long time. The truth is nobody really knows. So if you're trying to plan your life around life events and having liquid cash when you need it, investing in the stock market for this is fraught with risk. Let's compare that, on the other hand, to multifamily real estate in terms of risk and volatility. The truth is, volatility just isn't there in multifamily real estate. Risk is greatly mitigated as well. Why? Because we are providing a basic human need, human shelter. That demand for that is inelastic, which means that no matter what happens in the market, people will still need a place to live and people will pay rent. So as long as you are invested in apartment buildings that have a high demand for that asset class, i.e. buying it in good markets, the risk is greatly mitigated to as close to a zero as possible. Also, you know predictably around how much wealth you'll have, as well as how to predictably count for cash flow. So that when you do retire in 15 years, you need cash flow to live on. You know that predictably that you will have this cash flow with multifamily real estate. So multifamily real estate, on the other hand, as compared to stock market can disappear into thin air, right? The market could crash all of a sudden. Multifamily real estate cannot crash anywhere, cannot go anywhere, cannot disappear into thin air. Why? Because it's a solid physical structure. It's a building. It's tangible. And as long as there's people demanding to live in there, the risk remains very low. So we can take care of one of the major principles of real estate investing, which is number one, don't lose your money. Capital preservation. It's an immutable law of investing in general. With investing in apartment buildings, you are very much preserving your capital. There's very little room, unless there's egregious errors happening, that you can lose all of your money in multifamily real estate. Number three, cash flows. This is the most important thing to me, is cash flow. Like our friend here, this dog's name is Cash Flow, and that's because cash flow is a real estate investor's best friend, as are dogs. When it comes to cash flow and it comes to the stock market, there are no cash flows in the stock market. It's all or nothing. Either you have all your money in the stock market and it's just sitting there, you can't touch it. Otherwise, if you do touch it and take it out, you got to pay taxes on it. Now, there are stocks that do provide dividends, but the amount of dividends are not significant. And if you look at the slew of it and the percentage of dividend income to stock market overall value of the portfolio, the percentage is very small. On the other hand, take cash flow from a multifamily real estate or apartment building syndication. Apartment buildings are cash flow machines. And as a part owner of that apartment building, you are privy to your percentage share of those cash flows. And in this way, you can predictably know how much cash flow you're going to get. And this cash flow is often in a tax advantaged way that you don't have to pay taxes on it. And it provides you passive income that you can live off of. Having cash flow that you can live off allows you to rely less on your job as a doctor. It also gives you a mechanism to pass on generational wealth. Say you do really well as a real estate investor and you generate a lot of cash flow for yourself and your family. When it's time for you to pass on to the pearly gates and you want to give this cash flow to your children or heirs, this is a great way to pass on generational cash flows and wealth, generational cash flows and wealth. Number 4, tax benefits. The stock market does not allow for tax benefits at all. In this respect, multifamily real estate completely houses the stock market. If you want to use your gains from the stock market, you have to sell it. And when you sell it, you trigger a capital gains event and are subject to long-term capital gains taxes, which you must pay to the IRS. This also greatly reduces returns. Real estate or multifamily real estate, on the other hand, is one of the most tax advantaged assets that there is, period. It allows for a thing called depreciation, right? Which is an accounting loss, which helps to offset the obsolescence that happens with use of a property. And that often results in a paper loss, which allows you to not only not pay taxes on the cash flows that you gain, but it may give you excess losses, which actually helps to give you a tax shelter against your ordinary active income as a dentist. Also, there's ways to get into the equity without triggering again, a tax situation. When you refinance and pull equity out of a property, that is also a tax-free way to tap into equity, and it is completely legal. So when it comes to tax benefits, it's not even a close comparison between stock market versus multifamily real estate investing. And of course, the biggest buzzword these days is inflation. Inflation is through the roof. Supply chain crimps due to the pandemic, as well as printing trillions of dollars of quantitative easing, has led to immense liquidity, and as a result, inflation is rampant in our economy today. So let's look at how these asset classes do when inflation occurs. The stock market can get pummeled by high rates of inflation for a long period of time. If you look at the worst recession this country has ever faced in the last 50 years, in the late 1970s, when inflation was at double digits for several years, what happened was the stock market ended up crashing. So inflation is a return killer and can be a stock market killer. On the other hand, the best hedge against inflation, the best protection that you can get against inflation is investing in real estate. Why? Because the first thing that goes up when inflation happens is real estate. Rents go up. As you know, rents are sky high around us. And when rents go up, income from the property goes up, and the value of the property also goes up. This is how it works in the commercial real estate environment, like apartment buildings or multifamily real estate investing. So when it comes to inflation, real estate is where you should put your money. Because if you park your money during times of bad inflation, you are going to come out laughing on the other side, because real estate investors do really well during inflation. All right, guys, that's our video for today. I hope you gained tremendous value from it. We're going to continue talking about more millionaire building tips. And if you're interested in investing in multifamily real estate, please hit me on my website. You can fill out a small questionnaire and book a call with me directly so that we can see if this is something that is in your calling. Look forward to hearing from you. Let's go, guys. Let's build this wealth.